Is it time for traditional finance to merge with the crypto industry? Or is Bitcoin's leverage a red flag for investors? And will derivatives trading be the next step for digital assets? Welcome to Word on the Block, the series that takes a deeper dive into blockchain and the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm Editor-in-Chief Angie Lau. Well, a recent survey by JP Morgan across 1,500 institutions shows that 49% of investors say Bitcoin is, as Warren Buffett said, rat poison or a temporary FUD. The other 51% believe it's here to stay and will become an important asset in the future. But as inflation rates continue to rise, prominent voices in the traditional finance space, such as the big short investor Michael Burry, warns that governments will move in to squash Bitcoin in times of inflationary crisis. Burry also said that the crypto market is overleveraged. Well, crypto derivative trading has become a target for governments across the world, but despite that, my next guest today says that derivatives is the next big thing for cryptocurrencies. So the question is, how will that all play out in the age of inflation? He previously led Germany's second largest stock exchange, Börse Stuttgart, to become the first regulated crypto trading market in the nation. And now he is the CEO of 100X Group, which is the owner and operator of crypto exchange and derivatives trading platform, BitMEX. Alexander Hoptner, thank you so much. Welcome to the show. It's great to have you on.
Thank you very much for being here.
Yeah, I mean, you really come from the world of traditional finance, from your time with capital markets, from Deutsche Börse or the stock exchange, the Börse Stuttgart, as I said, and now you're in crypto. How'd you get here?
It's actually not that big of a move because firstly, by bringing Börse Stuttgart fully into the crypto world, as you said, as one of the early adopters to that one, especially fully buying into that story, for me, this is the next big asset class to come. And cryptocurrencies, as we see today, is just the starting point of it. It's not the end game already. It's the starting point of a fully new development of asset classes and trading items that we'll see in the future. And so what better place can you be in when you're operating markets than go into the crypto world? And as you said, derivatives are the next big thing.
But what exactly triggered that for you? I mean, you're sitting in your very pristine offices, no doubt, in Germany. You're heading one of the most prominent exchanges in traditional finance. And across your desk or across your attention span comes Bitcoin, cryptocurrencies. What tweaked it for you? What was the trigger point?
In traditional finance, we don't really have global fungible markets. We're talking about a global financial market, but actually we have regional connected market through oligopolies or monopolies on the post-trade side. And the markets are very restricted to pro traders that are exploiting, at least in some instances, on larger retail markets. And the whole tokenization and cryptocurrency economy and environment is to overcome this, to bring finance to the next level. And that means to firstly truly build a global fungible market that is accessible not only for pro traders, but for the wider mass market. And I think this is it. It brings the finance industry back to its fundamentals, to its core. It refocuses exchanges to operating and enable markets. And come on, coming out of an exchange world, this is the core place where you can be. No better place.
Well, I mean, BitMEX was really founded with that spirit as well. We had Arthur Hayes coming out of traditional finance from his offices in Hong Kong. And saw the opportunity to create a derivatives market and really explore that. You came, in terms of the timeline, after the pioneers, after the founders. And in fact, you came to the role at 100X 2 months after the BitMEX founders, Arthur Hayes, Delo, Sam Reed, CEO, COO, and CTO, respectively, and another early employee were indicted by US authorities for violating the Bank Secrecy Act, in essence for flouting anti-money laundering laws. We've been following that news timeline very closely. Did that hold? Was that something that you had to really consider
No,
before joining BitMEX?
no, not at all. Because when you think, and it might be now hard words, but when you think about the classical financial industry, tell me and show me the financial institutions who has never had any issues with regulatory authorities in the past. Let's tackle the last big financial crisis topics and banks involved in the, let's say, in all the endeavors there that got prosecuted at the end of it. So that's the first thing. The second thing is the cryptocurrency industry is a very new industry. There's not a lot of regulation out there already. So it's inherent that when you come into an industry which is so young that you're not fulfilling all the rules and regulations that are already out there. A lot of jurisdictions are right now developing actually the rule set around this. We're pretty stable on brokerage, we're pretty stable on spot, we're getting there on custody. Derivatives is the next big thing. So naturally, the regulatory authorities take a closer look at that one. So that's a natural given. And so for me, it was yes, okay, that's a topic you have to tackle naturally. But on the other hand, it's just something you just have to work out on that one. We're bringing the crypto world now to the next level of maturity. And that means that we bring it to a regulated world. And that means that we have to clean up some of the stuff that has been possible in the past in an unregulated world. But as I said, the regulators are waking up and we have to adapt to that one. Now, for me, that's easy because I'm coming from that regulated world. I fully understand what it's required. I've done it already. So bringing crypto to the regulated world. So it's not theory that I'm doing here. And so for me, that was okay, that happened. Now let's just tackle it.
You know, there are a lot of colorful personalities here, and certainly it takes that kind of assertiveness to really drive forward innovation and a product that nobody ever heard of, and to gain exceptional adoption in the industry to become one of the leaders in crypto exchanges. But I'm also thinking about, you know, these colorful personalities and these voices, and these that have also colored it in a negative way. Regulators in the U.S. have very clearly said that the former leadership and the founders of BitMEX were in that category. But we can't deny, and that's obviously going to be figured out in court. But on a broader sense, there's a lot of Wild West activity and behavior in crypto. There's a lot of reputational risk that the entire industry faces on a daily basis. And certainly now that we have seen the rise of DeFi, we have seen complete, pump and dumps, drops to zero recently. We've seen hacks, we've seen the like. How do you navigate this space as a traditional guy trying to work with regulators to know that this is still the space that you're working in, and that also potentially colors a lot of what you're trying to do on a daily basis?
I think we're how do you say this? I think we're a little bit over exaggerating some of the things that are happening there, because we're neglecting similar, let's say, developments from the past in the classical financial industry. We're talking about huge volatility. Now think about some bonds of some, let's say, fringe countries and problems the traditional financial industry had with these ones. Think about the Lehman crisis. Think about in Germany, Neue Markt. Yeah, everybody's complaining about ICOs. Out of the Neue Markt developed the prime standard, the DAX, so the highest quality standard. Everybody's complaining about ICOs. ICOs was a good instrument, but it was treated badly. But coming out of that, when it comes tokenization, now with the first steps of NFTs. So just because we are very new to using a technology, a new asset class, maybe in some instances not directly perfectly right, doesn't make it ultimately a bad instrument. Look at the classical financial industry. We've seen similar developments over the last 20 years. And now we're complaining that for the last 4 years, we see something in the crypto world. Come on, guys, you serious? Look at the last 20 years of classical financial industry. So what are we fussing around? The same with all this, oh my God, crypto is paying terrorism. what was paying terrorism before crypto? And nobody was complaining about this. Nobody said, let's take another global currency because that one is used for financing terrorism. But now, as it is crypto, everybody's complaining about it. So I think we need to treat it like for like. And like for like, it's a very new technology. It's a very new asset class. It has tremendous possibilities. And for me, it really sounds like that's the ultimate fight of the old establishment to prevent it from happening. Like the internet is not coming. Yeah, come on, who cares? And so for me, it's really, if you look beyond that, and if you take it for what it is, it's just another technology. And the regulator doesn't care about the technology; he only cares about function. And if you fulfill a function, you have to abide to the regulation. Then it all of a sudden becomes very easy, and it's very, very obvious what you have to do. And so for me, there's a lot of hot fuss around it, but it's not a lot of substance when you compare it to the classical financial industry.
Well, to your point, let's all remember the time that Bitcoin was birthed, right in 2008, at the height of the global financial crisis that nearly brought down not only one nation's capital structures but the entire world. So, good point there. What are you tasked to do at 100x and for BitMEX?
Yeah, we got to get back to a leadership position. I think we've come through the innovation of Arthur, Ben, and Sam and the perpetual swap, which was and still is the leading, most traded instrument globally. I think we can build back again on this innovation capabilities and capacities and our brand of BitMEX, the position that we had in the past. So, in a sense, transforming the company in this direction, bringing our strengths back like we had it in the past, and plus coming with my experience, moving the 100x group and BitMEX into a fully licensed and regulated world. Because what I expect is you need to learn to walk before you can run. DeFi is the ultimate goal that we're all striving for. But in step between this is cryptocurrencies and the technologies that we have right now moving into the classical financial world. And that means adopting to the rule sets that we currently have. We might complain about it, but this is a step that we have to take. And moving BitMEX into this regulated license world will open up mass markets for the crypto industry. And this is what I'm tasked for, to bring this to the next level. And as I said, most of the regulators are currently working on regulatory regimes on spot trading, brokerage, and custody. And the next thing that's coming now is defining and designing a regulatory regime for derivatives.
When you take a look at the landscape of your competitors, how do you rank? How do you rank BitMEX?
I won't. In what respect? I think, given that we are
in the most honest respect, in the way that obviously you could say that you're the best, that you have the highest trust value, et cetera, et cetera. But how about in the most honest sense, in that it's a very competitive landscape. We have Binance, we have Coinbase in the US, we have some in Korea. And each are trying to navigate this regulatory space. And, to a degree, who are you, you're competing against a lot of these crypto exchanges, and yet they're also your brothers and sisters in arm. What they do also influences, the direction of the entire industry. How would you rate the competitors and what everybody needs to do and what you're doing uniquely, potentially?
I think our biggest competitors ourselves, because we have to do the necessary transformation to bring the company to the next level. It's not Binance bringing us there, it's not FTX bringing us there, or it's not CME bringing us there, it's ourselves bringing us there. We did the right steps in bringing in KYC and AML, and in this one we are leading because we are the only one, at least as far as I know, that have a fully KYC'd and AML'd client base, and this is a necessary basis step. Is that seen all positive by everybody globally? Probably not, and you see this in the market share, but it is, from my point of view, a necessary basis step that we have to do to become fully licensed, to open up the mass market, and to bring new, let's say, clients to that market, institutional clients to that market, a wider retail flow to that market. So in that respect, we are ideally positioned. But when you look at naturally at the, let's say, product range that we currently have, yes, we have a lot to catch up with our competitors. However, I have to say that with the increased demand in the crypto space, coming from the spot, now moving into derivatives, it is still a long way and a lot of possibilities until we really are competitors in the sense of fighting for the same clients. Because we might celebrate the size of the crypto world in comparison to the classical financial world, it's still very, very small. So we have a long way to grow until it's really a red ocean market, yeah, like we have it in the classical financial world. And in that sense, yeah, we are more brothers, but we should behave more like brothers, in a sense of we can transform the regulation only together. Yeah, it cannot be just one player doing that. We need to together prove that we're doing the right things to bring it to the next level. And then that, I think the industry could do more.
I absolutely agree, and there have been cries for the industry to police itself, to self-regulate. We're seeing some of those moves in India right now, as that nascent industry attempts to work with policymakers and regulators in India, and that is still a very volatile relationship. But also, even just in the market, people who have been scammed or hacked, trying to get back to exchange and try to restore what they've lost, and the exchanges themselves sit at the crux of a lot of the ability to actually return and participate in this if they wanted to. Some do. Some do when forced, but is in your view, do you think that there should be a concerted effort within the industry, and who's going to lead it?
I think there should be a concerted effort of the industry to help the regulators understand the possibilities of the new asset class and the technical possibilities that comes along with that. You got to understand that regulators, they are not proactive. Their job is not to be proactive. They're acting on something that the industry is driving. And they are put in a very difficult spot. If they are too loose on the reins and something happens, they are to be blamed. If they're too tight and they restrict the new developments, they will be blamed. So it's a lose-lose position for them. The only chance to build a viable regulatory regime is together with the market participants. Now, we need to show them the possibilities and the benefits before the classical financial industry. And naturally, there, it makes more sense to have all the voices collected together and speaking the same language to the regulators than somebody popping up here, telling this, somebody popping up there, telling this, and also telling something different to the different regulators. That doesn't help, because then ultimately we'll have the same like in the classical financial industry, where you have regional markets who are differently and they need to be connected over monopolies. And it's exactly what we want to overcome. So from my point of view, it is a collective effort of the industry. Now, who's the right one to lead that one? Normally, you would say the biggest one is the right one to lead that one, or at least there needs to be a conglomerate one. Big one can be actual size, can be name, can be reputation, can be industry knowledge or connection. There's various angles from which you can tackle that one. But let's say the most dominant players and the most outspoken players should come together and do this as a concerted effort.
Latest headlines in London: FSC clamps down on Binance. Binance UK is leaving that market. South Korea, they're intensifying crypto regulations for exchanges, for crypto exchanges specifically in September. Hundreds once in business, now just a handful possibly applying to remain in business as a crypto exchange in South Korea. Where do we sit right now with regulators? With Binance as a market leader globally, now having to leave a major market. Where do you see BitMEX as you start to reposition yourself?
I think we need to get fully licensed in a appropriate and respected jurisdiction, and this for all the relevant aspects of our strategy. So through the strategy revamp, we announced we're going to brokerage, derivatives, spot, information products, and in custody. And if we want to be present there to address the mass market, that means we need to have a license for all of these aspects, and we need to have a license not allow me to say something here, something there. Hey, oh my God, here we found something under a stone. Let's put it there too. No, you got to, if you're really honest up to that, you have to go to a respected jurisdiction and you got to be.
Where is that for you?
Let's say most advanced. You have to double check where the jurisdictions are most advanced on regulatory regimes for cryptocurrencies. There's namely a few of them. I mean, Singapore's opening up, Switzerland, Germany's doing a lot, Canada is doing a lot. There's a lot of jurisdictions who are tackling that already. Japan is now waking up again. Even the US are waking up now with the change in government. We see much more discussion around this. So I think there's various jurisdictions. It now depends on where your starting point is. For us, wanting to offer the full value chain, countries like Canada, Switzerland, Germany, but also Japan, Singapore naturally, would be very interesting. And we have to see and find out which regulator is most open, especially for the derivatives part, because there's very few regulators already having defined that one. Bermuda is the only one who has structured a crypto derivatives regulation so far. So we have to see who's the first one to wake up for that one. But these are mostly the dominant countries. But Korea is a very interesting market. It's very difficult from a regulatory standpoint right now.
And that is what we're hearing and reporting as well. I mean, you're answering directly very much the criticism that we even heard from Nouriel Roubini. I was there. The tangle with Arthur Hayes in Taiwan at a blockchain conference just a couple of years ago, before COVID. But addressing the criticism of being based in Seychelles and jurisdiction shopping, which was very much what the criticism was laid on early exchanges, Malta, Gibraltar, Seychelles, and not to disparage any of those jurisdictions, but certainly in the tier of regulatory gold standard, they're not up with, as you've said, the Singapores, the Germanys, the Switzerlands, and the United States. I did not hear the United States as potentially a priority for a base for BitMEX, even though obviously, Arthur is an American citizen. However, obviously as well, all of there's certainly some tension there as the U.S. is proceeding with legal action against BitMEX founders. But why not? But why not U.S.? I mean, it is the gold standard. If you can make it there, as they say about New York, you can make it anywhere.
I think firstly, it's unfair in hindsight to say that, for example, Seychelles is not a good location. Yeah, I think when you look at a lot of, I mean, every country more or less has this. Let's say if you want to have a company set up fastly, you go, I don't know, you go there. Even Germany has that. Yeah. In the US, it's a Delaware company. In, I don't know, in Europe, you go to Gibraltar or Malta. I'm not saying badly about the regulation in both countries, but
And not to disparage any of those
absolutely
countries.
not. Yeah,
Absolutely.
but
Yeah,
it's
absolutely.
in hindsight that the regulation is developing in a certain direction, and now complaining that the companies took the first step in doing that. I think it's like, yeah, it's not really fair. Yeah. Now, world is not fair, so who cares? But I think that is something I should say to that aspect. Now, the US definitely is an important market, but same as Korea, same as China, same as Japan. All these markets are very difficult from a regulatory angle. And you, as a company, you have to make up your mind how you want to approach these markets. All these markets are super important and super relevant. Do you have to physically be there alone? That's a question you have to tackle. You cannot be in every country in the world fully regulated. It's impossible. So you have to pick and choose where's your primary location, where do you want to operate with which aspect of your offering, and where might you partner up at the end, or even consider joint venturing or doing something else. And you see the same once again in the classical financial industries. Most financial institutions, like the bigger exchanges, they don't have multiple exchange licenses. They usually pick one exchange license, and then they have broker licenses or custodian licenses or post-trade licenses, CSD or ICSD licenses. In the classical banking world, you have the broker-dealer licenses in the various jurisdictions. So you have to build for yourself a license strategy, which at some point in time will have to address the most important market. How we will tackle these markets, we have to find out. Let's start first things first. Start with the first fully licensed jurisdictions, and then we tackle the next one. And probably the first one is not the US.
What about Hong Kong? You mentioned Singapore. Why not Hong Kong?
I think there's currently a lot of discussions about what the jurisdiction in Hong Kong will be. We don't know so far. Naturally, Hong Kong is a very important market, is a very talented market too. So it has various aspects that are very interesting, but we have to see how the regulation develops. And then we have to make up our mind how we position ourselves in that one. So it's a little bit too early. As an interesting market, absolutely. I would love to be here. But let's see how it all plays out, and then we have to decide it. Currently, we're not serving clients in Hong Kong.
Got it. You're not serving clients in Hong Kong because of the latest policy. Same with the US. And
Correct.
Potentially in Asia or Europe is what I'm hearing. Let's talk about the markets now. It's been a very volatile market over the past couple of months. The highs of the highs, and now we're probably half that at the moment. As of whenever our audience is watching this, it could be ranging from 35, where it is right now, to higher or lower. When you take a look at just the volumes of activity and also the who is participating in the markets, how are you viewing the market reception to the volatility that we've seen in crypto over the past couple of months?
I think, firstly, I think the let's say the negative development of the past weeks, yeah, and we see a floor somehow, at least a line around the floor right now. I think that's every so often that's a natural development that you see there. I wouldn't overrate it right now, because for me this is a long run anyway. When you look again, take a look at the classical financial industry and look what happened over the course of 20 years. I mean, you have seen DAX at 2,500, and now you see it at what, 13,000, 14,000? Yeah. Look at the Nikkei. Look at the Dow Jones. And so for me, was just a correction. Yeah. Yes, volatility is low, volumes are still good, and so that's a correction phase for me. Nothing more, nothing less. The interesting piece will be what happens around the developments on the classical financial market, and how much is the crypto world still tied to that one.
Yeah.
Past, you can see some correlations over the past couple of, let's say, months. You could see some deviation from these correlations. Yeah, and so it's very interesting to see how that develops going forward. Yeah, but the general development, I don't see too negative actually.
Inflation. I'm thinking about inflation. We're seeing the rise of inflation in the US, in China, around the globe. Things are getting more expensive. The power of the dollar or the currency is weakening. How do you think that's going to play out in the crypto markets if inflation fears intensify?
Yeah, this is what I was hinting at.
Yeah.
The question is how much is the Bitcoin and other cryptocurrencies used as a fail-safe against the inflation in classical currencies, and how much correlation is then still there. I think, at least to a certain extent, it is a means to position yourselves outside of the classical financial industry, which is just too natural when you look at what happened. We talked about the Lehman crisis and other crises that we just scratched, and there's a lot of, let's say, discussion around when the next crash will happen. So it's a natural given, and that can naturally spoil and support another upturn of especially the Bitcoin. The question for me is also then, is the Bitcoin already developing to be a different animal, quote unquote, to say? Yeah. So is maybe Bitcoin becoming also discussion that's happening about the next gold? Yeah. So is that more the storage, the value storage cryptocurrency? Maybe ETH is developing in what Bitcoin was before. Because even if we talk about some interesting altcoins, ultimately it all tailors around the two of them, at least for now.
Yeah.
And so there might be even a change in how we use this, or how it is seen, or how is it treated. And it's very, very difficult to foresee, especially with the inflation and the correlation to the classical financial market right now.
And the,
Yes, please.
the counter concern as well is that is Bitcoin over leveraged?
Is Bitcoin over leveraged?
I mean, take a look at, I mean, you're calling yourselves 100x. That is one of the, that is, you built yourself up on leverage, perpetual swaps, what we're seeing in DeFi. But there's also growing concern that there is over leverage. Does that even exist in a smart contract world? But I'd love to hear your view.
So firstly, when you look at the leverage products, yes, we have 100x, but the majority of the leverage clients are using is single digit. Yeah. So when you look at the, let's say, overall how customers are using that, yes, it's an interesting instrument. It's an interesting aspect to have a leverage that big, but it's not what everybody's using on a daily basis. And so, is it over leveraged by leverage products? No, I don't think so. When you look at the classical financial markets, yes, the leverage is lower, but the usage of that one is much higher. When you look at the classical derivatives markets in regards to the spot market, the derivatives market is tremendously bigger, and the leverage might be lower in absolute what you can have, but the composition is much higher on a leveraged product. Is the crypto world too leveraged in a sense? It is still too dependent on very, very few, very outspoken personalities. I think that is the biggest issue right now, because they are so
The Elon
influential.
Musks of the world.
For example, they are so outspoken, and they are so much moving the market still. That can have a negative image impact. Not so much, I'm not talking about whether there's a price drop or not a price drop. Come on. I mean, on a 20-year basis, who cares? But the problem is that the instrument is so young that the unexperienced mass is taking this as a negative um, symbol for the stability of the underlying asset. And that's the risk for it. Now you can again start to argue, yeah, but is the current leadership of the Fed not as influential as somebody like this? And is not everybody reading every word from some messages that are coming from there? Yes, they are. So when you look at that and the comparison to, again, the classical financial market, again, is it that important? But yes, it is, because the crypto market in comparison is so small. And this is more of a risk, that while it is still so small, people so influential need to be much more aware about what they are saying, because of the potential negative impact to the full ecosystem.
There's a responsibility here, there's no doubt, but you also echo something that, whether or not this entire industry is mature enough to actually handle the retail investors and then also the traditional institutional investors. You kind of sit right in the middle as you try to, you come in from traditional finance, you're talking with regulators. If the market, if the exchange business is to grow, what needs to happen?
I think the exchange market In a sense, it's very easy. Regulation is not a hidden secret. It's not something where you have to find out, oh my God, what do we do? I mean, most of the regulators, they have it on a homepage. You can just download it. Yeah. And then you just have to follow it. It's like a manual, like do this, do this, do this, and this, and then we're fine. You just have to do it. Yeah. And you have to offer that on a, let's say, standardized, transparent, and secure basis. And more or less that's it. I mean, retail investors, yes, special protection for retail investors, data protection. But again, the data protection rules are out there. You can just download it, you can read it, you can just apply for it, or you can just build it into your system, and then you can offer it. And in that sense, we should stop fuzzing around and start to just do this. Yeah? The longer we are trying to maneuver in a grayish area, the longer and the more difficult it will get, and the harder the reaction naturally will be from prosecutors and regulators. The sooner we adopt and include them in a discussion and build something together with them, then which is available for retail and institutional investors, the sooner we get to mass market adoption and the sooner we get to a wide acceptance of cryptocurrencies or tokens as future means of trading. And in that sense, we just have to do it. And this is not such a big secret.
What's next for you? What's next for BitMEX? Who's your ideal investor?
My ideal investor. Then, as I said, the next things for us is really expanding on the product universe, getting a fully licensed approach to assure our investors that we're abiding to the rules, and that we apply for the rules that are out there for financial products, or that for the license regime for cryptocurrencies and Bitcoin and what we are offering. As I said, building the product universe, offering that on a broad basis. Ideal investor, there's not a single ideal investor. We're here for the mass market. We want to have the retail investors. We want to have the more sophisticated or semi-pro or pro traders. We are offering services to family offices, smaller institutional clients, and bigger institutional clients. I think you need to have a healthy mix. If you don't have a healthy mix, then you will have issues at the end, because you need to have it, because the individual customer classes, they're fueling each other. Yeah, their offerings are different, their demands are different, but they all need to come together to an ecosystem to build a live exchange world. So there's not a single one that I can point out and say, let's hunt for that one. Unfortunately not. If that would be, it would be nice.
I would also say a healthy discourse and a healthy conversation, of which I would absolutely rank this as one. Alexander, it was such a pleasure to sit down with you and really talk about so many wide-ranging topics, but most importantly, the industry that we both share. Alexander Hoptner, CEO of 100X, got to thank you so much for joining us on this show.
Thank you very much, Angie. It was a pleasure being with you.
And thank you, everyone, for watching this latest episode of Word on the Block. I'm Editor-in-Chief of Forkast.News, Angie Lau. Until the next time.